We are tracking some major movements in New Zealand's economy and politics, from shifting mortgage rates and a big corporate money move to the latest elections news. We've got a lot to cover. Let's get into the pros and cons of today's biggest headlines. First, let's look at your wallet. The Co-operative Bank just pushed up most of its fixed home loan rates, expect for the 6-month term, while also raising return on several term deposits. The pro, if you have money saved up, you can now get better returns on your term deposits. The con, if you are looking to buy a house on a rollover mortgage, borrowing just got more expensive, as we said last week. In big news, Ryman Healthcare wants to raise up to $150 million through a 6-year bond issue to pay off its bank debt, offering a 5.8% return. At the same time, St. Milk is working to lock in its funding by rolling out $130 million loan from its major shareholders, Bright Foods. The both companies are now actively taking control of their debt and stabilize their futures, which is good sign for their stability. The con, relying heavily on shareholders' loans and issuing a massive bond shows shareholder loans or issuing a massive bond show just how much pressure these companies are under to keep their finances afloat. Now, how is the economy actually handling this? Paymark reports that retail spending was very quiet in May, especially in Auckland, Canterbury, so a tiny bit of growth, but that's only because last year numbers were so incredibly low. Reflecting this slow mood, with NZX 50 stock market started this week down 0.5% today on Monday. The pro, slow retail spending means people are being careful with their money, which can eventually help bring down the inflation. The con, it is bad news for local businesses struggling to make sales, and dipping stock markets shows investors are feeling nervous. Meanwhile, ANZ economists have a striking prediction. Despite recent changes in oil prices, they still believe the Reserve Bank will lift an official cash rate 3 times this year to hit 3%. This also predict house prices will slide another 2% this year. The falling house prices give you first home buyers a slightly better entry point into the market. Going 3 more rate hikes means mortgage rates, interest rates are highly likely to keep climbing this year, squeezing household budgets even tighter. Turning to the 2026 election trial, the Labour Party has officially locked on its list of candidates. Their finance spokesperson Barbara Edmonds has been very active in the campaign trial, heavily focusing on message that hard work should get you ahead. The locking in candidate list makes party look organized and ready, and positive message about hard work connects well the everyday work New Zealanders. The critics argue that voters want to see concrete, detailed economic policies rather than just relying on a catchy campaign slogans. Look overseas. For some context, Australian markets are completely closed today for public holiday, but Japan just reported stronger than expected economic growth, with the GDP 1.8% in the month quarter. With interest rates on a rise and a big election ahead, New Zealand's economy is very interesting spot. How are you feeling about prospect of more interest rate hikes this year? Drop your thoughts in the comments below, hit that like button, and we'll catch you in the next one.